Can Fin Homes Limited Q3FY23 earnings conference call hosted by Investec Capital Service. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during this conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Nidesh Jain from Investec. Thank you, and over to you, Mr. Jain.
Thank you, Neerav. Good afternoon, everyone. Welcome to the Q3FY23 earnings conference call of Can Fin Homes Limited. To discuss the financial performance of Can Fin Homes and to address your queries, we have with us Mr. Amitabh Chatterjee, Deputy Managing Director, Ms. Shamila Man, General Manager, and Mr. Apurv Agarwal, CFO of Can Fin Homes Limited. I would now like to hand over the call to Mr. Amitabh Chatterjee for his opening comments. Over to you, sir.
Good afternoon, all dear investors, and welcome to this Q3 earning call, sir. And just to start with, our company Can Fin Homes has completed 35 years of existence, and during this year we have reached a milestone figure of 30,115 crores. We have crossed the 30,000 crores figure, registering a 9-month growth of 20% YOY growth. And our disbursement in this 9 months from 5,500 it has become 6,410, registering a 15% YOY growth. And our income has risen by around 38.65% from 1427 to 1978. Our operating profit has also shown an increase from 487 to 644 to around 32.16% growth. And our PAT from 348, it has become 455, registering a 30% growth. Gross NPA has been well contained against 177. We have now around 60% gross NPA, and net NPA is around 30%. So our asset quality has remained stable. So, pardon that, 0.30% net NPA. So, with this, I request the investors to ask any questions they have.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Participants, you may press star and 1 to ask a question. The first question is from the line of Abhijit Tibrewal from Motilal Oswal. Please go ahead.
Yes, thank you for taking my questions. So good afternoon. I had 2 questions. The first one on how are you looking at the demand environment right now? YOY disbursements were largely flat in third quarter. So is there some sluggishness in demand which has started coming in because of the high mortgage rates? Or would you say that 3Q was more of an aberration and we can again expect buoyancy to be restored from the fourth quarter onwards? So that is my first question.
Okay. Just to answer your question, this demand is intact despite that rising prices or rising the cost of the building. Demand is still there. And going forward, I think that desire to have ownership of house in the affordable segment is quite good. And demand will be remaining intact in the coming quarters. Coming to Q3, I think we have disbursed more than September. It is registering around 9% growth is there as far as disbursement is concerned. And as far as book is concerned, it is around 4.4% growth is there. And I think whatever we projected, 18 to 20% YOY growth in both in terms of disbursement and book growth, we are maintaining that trend.
Got it, sir. So the second question that I had was on the liability side. Just trying to understand, maybe 2 subparts to this question. What was the total borrowings number as on December?
Total borrowings were 27,800.
Okay. So sir, on the liability side, I wanted to understand that, how much did you borrow from NHB during the quarter? And are there any current undrawn sanctions from NHB which maybe you are looking to draw down in the fourth quarter? And sir, what we are seeing that during the quarter you have borrowed, I think, more extensively in the form of NCDs, commercial papers, basically from the debt market. You've also drawn down from NHB during the quarter. So wanted to understand, are these loans, NCDs and CPs kind of coming in effectively, lower priced versus bank term loans, and which is why you are moving there? Or is the idea that given that 25% of the incremental borrowings during the quarter has to happen through debt market instruments, which is why you are maybe borrowing through that instrument in the first or 9 months of the year, and then maybe in the fourth quarter we will see more borrowings from the bank? And so the related question again here is that if I kind of look at the margins, given that you have an annual reset on the loans that you have given, home loans that you have given to the customers, is there a reason to believe that a margin compression will maybe continue for 1 or 2 quarters, depending on the trajectory that repo rate will take, and then from there on we can expect some improvement in margins or some stability in margins?
To answer you that first NHB question, I think we have borrowed around 900 crores during this quarter. We have got a sanction of around 1,500 crores from NHB. Out of that 900 crores we have borrowed, and it is going to constitute around 23% of the total borrowing as of now. Total outstanding from NHB is around 23% of the borrowings. That is one point. And why we raised NCD? Because we find that during the end of the year there is a lot of demand for NCDs from the market. So that time we are getting high rates. So we thought let us span it out throughout the year. As a prudent decision, we have taken this. Let us borrow throughout the year to get an NCD at cheaper rate. And commercial paper is what we were 1 year ago. I think commercial paper has not come down. It is mostly a cost management tool. And whatever commercial paper we have borrowed, it is backed by bank borrowings, unavailed limits. So we feel that at that date, commercial papers are ruling low than what bank has to offer. So we decided to go for the commercial paper. When they mature, if we find it is prudent to use bank borrowings to liquidate that, we liquidate it.
Instead of the margins?
Margin, see, now around 72% of, we have raised the rate of interest thrice in this 9-month period. And 72% of our book is yet to be repriced. And it is going to happen in next 3 to 6 months time. So I think we have already bottomed out as far as margin is concerned. Now what we foresee that going forward our NIM and spread should increase because major portion of the book will be repriced at a higher rate.
What is sir, by how much have we increased our lending rates in this 9 months since repo rate hikes have started?
We have increased it at 145 basis points.
145 basis already. Great, sir. And sir, thank you so much. And just one last question. Last quarter, you had guided for about, I think, 12 to 14 basis points of credit costs. Given that we have already seen the first 9 months of the year, is there a reason to believe that credit costs in this year could be actually lower than that 12 to 14 basis points that you had guided?
See, we have our incremental credit cost during this year was 0.06%. And going forward, our credit cost will remain in that range only, our incremental credit cost. Because our book asset quality is going to be stable in the coming quarters.
Got it, sir. That's all from my side, and thank you and all the very best.
Thank you. Next question is from the line of Dhaval from DSP. Please go ahead.
Thank you for the opportunity, sir. Sir, first question, just to sort of complete the point on margin. So you talked about that the spreads should have bottomed out. I just wanted to understand, this repricing, what's the reason for the delay? Why do customers, take like the reset rate takes time for these customers? You said that it will take another 3 to 6 months. So just to understand that part. And do you intend to take further price hike, or this is basically the peak level where you are at this point of time?
We are following a method of annual reset. So all our loan books at the date of their disbursement, they get reset in the same date in the next year. So that's why I told it will take around 3 to 6 months to get the major portion of the books reset at a higher rate of interest. So, but our borrowings get reset at a T+2 days. Some borrowings get reset at a quarterly intervals. So this is the reason for the margin compression. And as far as the rate of interest, speaking of rate of interest is concerned, I think now that inflation is almost controlled, and growth is now government is thinking about growth. So we do not foresee a major jump in hike in rate of interest in the coming future.
Understood. And sir, just to sort of complete the point on rate of interest, so if I look at from the lows that you had in 4Q22, the cost of funds were 5.56 at that point of time. Today they are about 6.63, so there is a 107 basis point increase till December. How much more increase do you see from the current level, let's say in the next 6 months, based on the current rate environment? Any color around that? Just trying to think, the 135 bips, would it be adequate enough to offset the impact eventually?
So I think we can expect another 20 bips increase in the coming days. Max to max around 20 bips increase. And at every 15 days we have an ALCO meeting within our company, and we review what is the position. And if required to get the required margin and spread, we may go for another hike in the rate of interest.
Understood, sir. So that's very clear. Sir, the other question is on the loan side. So you said that you maintain the 18 to 20% disbursement guidance that we gave in the previous quarter. Just in terms of the ask, so right now we are about 15% disbursement growth for the first 9 months. I mean, in terms of ask rate, that would translate to about close to 24% growth in the fourth quarter on a QOQ basis, and in absolute terms about 3350 odd crores. So I just wanted to get your thoughts around it. I mean, what is the kind of growth do you expect for the full year on disbursements?
Generally fourth quarter is better than third quarter, and third quarter is better than second quarter. It is the trend which is followed over the years. So Q4 also, we are expecting a good growth in numbers. On a conservative side, we are maintaining a 20%, but we may end up in a higher growth.
You mean on the loan side?
Yes, book side as well as disbursement side.
Understood. Sir, just one last data keeping question relating to provisions. Could you give the stock of specific plus general plus restructured provision? Last quarter that number was close to 280 crores. Where are we currently?
No, restructured provision against RBI restructuring second phase, we are around 67 crores we are holding as an additional provision as per regulatory norms. Other than that, we are holding around 221 crores on a total book.
Got it, sir. Thank you and all the best.
Thank you.
Thank you. Next question is from the line of Shripal Doshi from Equirus Securities. Please go ahead.
Yes, sir. Please.
Shripal, we are unable to hear you. May I request you to unmute your line, please?
Am I audible now?
Yes, you are.
Yeah. Good afternoon, sir. Thank you for giving me the opportunity. So just wanted to understand what are the current card rates that we are offering to our customers?
Card rate is currently what we are offering is 9.6%, and new customers onboarded, we are offering 25 bits concession.
All right. And sir, so 20 basis points, we would be giving them loans at 9.4%.
Yes. That is to the prime customers.
Prime customers, okay. So, and the higher range would be?
It depends upon the risk rating, and on an average, we find it should be around 10%.
All right. So just one other question was on this yield calculation side. So when we calculate it on the basis of average AUM or average gross loans, the reported yield that the company gives, there's a constant difference which is increasing. So just want to understand the calculated yield side of the things that you guys work out with.
Joshi, could you answer this?
Yeah, simply that interest calculation yield is on the basis of each loan what is in earning and the interest earned on each loan for 9 months. So because the rate of interest is dependent upon each loan is dependent upon the credit scoring, risk matrix and all these things. Even though rack rate is 10.6 or anything, the end up rate will be little higher or down. So that is why the yield what we are calculating on the straight line method and on the loan wise method differs with a gap of around 15 to 20 bits.
Okay, so you are doing it on advances, gross advances or net advances, like?
Gross advances only. This is what we are earning on the loan amount what we are granting.
Okay, got it. And so with respect to NIM, so like during the quarter we did a decent job there. So what is it that we worked with respect to liquidity? We brought that down in the balance sheet, or what is it that we did differently that we were able to manage the NIMs so well, while the spreads have come down below 2.4%, which we've been guiding that we'll be able to defend?
So the NIM is what happened as explained earlier. The NIM is totally dependent upon the borrowing cost and the lending cost, as I explained earlier. With the rate being firming up, 6.25 is the repo rate now, and another 25 bips also hike. What we anticipate, the lending it may end up at 6.5. Factoring this and taking into consideration the overall revision what we have done and the annual reset of the existing book and the incremental lending what we propose in Q4, put together is going to give an anticipated NIM which is higher than the present one. So virtually we are at the bottom of the reverse bell curve. Whatever is going to happen going forward will be an upward trajectory only.
Okay. So one last question was with respect to the provisions. So if we look at the provision coverage ratio on stage 3, has been quite volatile over the last, say, 2-3 quarters. Like earlier it was 53, then it came down to 43, then again this quarter it is up to 50%. So what is the thought process there? What is it that we are trying to maintain here?
Actually, we migrated from the IRAC to the Ind AS concept as per the regulatory guidelines from Q2 onwards. So going forward, you have to maintain the provisioning as per the Ind AS or ECL model, where the standard assets also require the provisioning at the rate of delinquency of SMA 0, 1 and 2. So because of that reason, in the IRAC, you may have to make the provision at 0.25% or 0.40%, whereas if you factor that into percentage, the provision requirement may come up to the extent of 0.78 to 0.98 and 1.10. Because of that reason, the provisioning, even for standard assets, ensuring that the NPA will not move, the provisioning coverage ratio will be going up because of the ECL model. That is why what you are seeing the volatile, it has come down and it is going up now. And going forward, any incremental lending which is of standard nature demands more provisioning, and provision coverage ratio also will improve going forward.
Okay, but your credit cost guidance remains intact as what you're guided, right? Irrespective of these.
Absolutely.
Okay, got it, sir. Thank you so much, and good luck for the next quarter, sir.
Thank you. Next question is from the line of Ankush Agarwal from Surge Capital. Please go ahead.
Yeah, hi sir. Thank you for taking my question. Firstly, on the 72% book that you have said is yet to be repriced.
Interrupt you. May I request you to speak through the handset?
Thank you. Is it better now?
There's a lot of echo while you're talking. Can I request you to talk through the handset?
Just a second. Is it better now? Hello?
Slightly better.
Yeah. Yeah. So my first question was on the 72% of the book that you said is yet to be repriced. What is the delta on the yield that you can expect on this book?
See, the main thing is what the reset is going to take place on an annual basis. That means these loans are holding the rate what it was granted to them at the time of lending. If I say January lending of last year, the tax rate was somewhere around 8.25 and discounted rate what is given to the class A lender borrower is around 7.75. Now this loan is getting to reset to the card rate which is going to be 9.60. So that means there is going to be an impact to the positive side in the yield by nearly 2%. This is the delta impact and the division what will happen. That's why then 72% is going to get repriced over a period of Q4, Q1 and Q2. So this is presently 1.9%. Going further it will come down because June we are revised. So that means Q1 the impact will be somewhere around 1.5 and when we come to the Q2 it will be around 0.75.
Right. So it's like it will decrease from 2 to about 1.5. Got it. And so in a downtrending interest rate environment, this reset would again follow the annual one, right? It won't accelerate.
Sorry, I think you are not clear, sir.
So, like in a downward interest rate environment, I believe we would be on the gaining part of it because same thing will happen that the annual reset would happen and we would be having a higher yield loan because there would be again a 1 year lag by the time the yield gets repriced to a lower level.
Yes, is exactly what you told. When there is a downward revision in rate of interest, we stand to benefit immediately on that.
Right. And so, is there a possibility that in case of any situation, like if you want to reprice the book in between, is there any understanding with the clients that in a situation like that we can do it?
That clause is always there in the agreement, but we seldom use it because we want not to lose our good customers.
Right.
We want
but we do have an option there.
Yes, we are having that option.
Got it. And lastly, sir, on the capital raise, any timeline or any thoughts like if you are looking to do it? Because I think we are approaching that 8 times debt to equity that we have always kind of maintained as a hurdle. And if you say that you can do it 20%, so probably Q1 we would be needing some capital. So any thoughts on that?
See, every year this position is reviewed by the board with regard to capital position and the projected profitability and other things. We are already having an enabling clause. We may raise the capital in coming 2 to 3 quarters if required.
Nothing has been decided.
No, as of now, nothing has been decided.
Got it. That's all. Thank you.
Thank you. Next question is from the line of Shweta Dattadar from Elara Capital. Please go ahead.
Thank you, sir, for the opportunity. Couple of questions. So you mentioned that as against the 20 bits spike which you are anticipating in cost of funds, you would see somewhat asset repricing going forward. But at the same time, given that your card rate currently stands at 9.6%, so how much incrementally you see you have that leeway to increase this rate ahead?
See, now their increasing rate of interest, we decide certain factors, what the competition is offering to our customers and what is the targeted NIM and spread we hope we give to the investors as a reference point. All these things are taken into consideration. Book growth is there, AUM is there, everything. Then we can also raise the rate of interest at any point of time. So maybe we may increase another 25 bps to 30 bps if required so.
Okay. So against this backdrop, and you also mentioned in the previous question that your disbursement run rate, Q4 is always better than Q3, but the momentum definitely has come down. So any slowdown or sluggishness in disbursements will be observed because of the higher rates that will come to see going forward?
No, see, while it depends upon the affordability factor. whether customers are ready to take that higher rate or not. Now the property prices are shooting up. Rental incomes are also going up. So, and what is the surplus income that customer will be? Income levels are going on, and depending upon the surplus level available to the customer, I think they can take another 25 bps to 50 bps hike.
Okay. Understood. So then one last question. Is there anything on the audit front that is going on internally or from the regulator front? Any observations or anything that is pending? Also internally, have you changed your audit policy or some reviews wherein the frequency has increased now? Anything on that front, if you can give some color?
See, our audit policy is drafted in line with the RBI audit policy. Apart from that, internally, we are auditing our branches once in a quarter. And all VLVs and other branches, big branches, top 20 branches, there we have introduced a system of concurrent audit. So if anything is noted, the corrective measures can be taken at a earliest date. So these are changes we have brought. And apart from that, we are also imparting training and other inputs to our staff who are working in the field to be more vigilant and to be have more due diligence. And as regards the regulatory audit, I think we have not had anything so far. We have not been intimated, and we feel as such at present there is no trigger to have such audit.
Sure, sir. That's well taken. Thank you so much.
Thank you. Next question is from the line of Sarvesh Gupta from Maximal Capital. Please go ahead.
Good afternoon, sir. Sir, one question is on your disbursement rate. So obviously, if you look at a YOY or even sequentially, while there is some growth, but YOY it's been flat. So, what are the trends that you are seeing amongst your customer base, given that in the last 9 months, 10 months, we have seen almost a 200 basis point increase. So, if you can throw some light on how your customers are taking this interest rate hike and how is that affecting their purchase decision and financing decision?
See, customers so far, they have not reacted adversely to the whatever hike of rate interest we have passed on. Our BT are under the controllable level, and people have accepted this rate of interest hike. And we do not foresee that any slowdown in disbursement or retaining the book is a concern with the current rate of interest.
And this 78% of your book, it is yet to be repriced. So what is this annual reset date, number one? And, what can be the, once your customer sort of get this sort of a one-time hike of almost 2% so what is the expected, sort of reaction from the customers given this? Because they might want to sort of shift to other lenders or getting better rates or something like that when they see such a steep hike in one go.
See, one thing that, first of all, that 72% of our book is yet to be repriced. That is one thing. And if they think of going to new banks or some banks, there also they will face a similar rate of interest, because whatever bank they go, they will be getting that lending at the current rate. So it is not a problem, and I think we have been able to control our BTO at BT's balance transfer, and we do not foresee as a challenge to our disbursement as well as book growth.
Understood, sir. Thank you and all the best.
Thank you. Participants, you may press star and 1 to ask a question. Next question is from the line of Dhawan from DSP Mutual Fund. Please go ahead.
Yeah, so thanks. Just a couple of follow-ups. One is on the new MD and CEO appointment. Any timeline around it? Could you just update on that? That would be very useful.
See, the person who has been selected is expected to join in this financial year. So no date has been so far finalized, but the person is going will be joining in this financial year itself.
Okay. Okay. Thanks. And sir, the other question is relating to the restructured book. So I understand, bulk of the restructured book was supposed to come out of a moratorium in the last few months. Could you just update us on the, on the behavior of the restructured book? How many percentage have, are paying regular, or some more data around that would be useful. And lastly, the data keeping question on gross stage 2 asset, what's the number as of December 31st, and the provisioning on stage 2 asset? Yeah, thanks.
See, as far as restructured book is concerned, that repayment has not yet started. It is going to start in a staggered manner. But since we have formed a team and that is following up of the restructured accounts, so though the repayment had not started, but in 30% of those accounts, we have started receiving the repayments, and in some accounts are also getting closed also. So going forward, I think we will be handling this restructured book in an efficient manner, and against that we are holding around 67 crores provision.
Understood.
Regarding the stage 2 accounts, the amount is the same as 1,000 crores. It remains same in Q1, Q2 as Q3. It's the 10 crores up and down here. And we have moved last quarter also, restructured accounts are moved to stage 2. So with 701 crores of restructured accounts put together, 1,700 crores is there in stage 2, against which the provision held in the books is around 48 crores.
Sir, sorry, what's the provision number you said? Sorry, I missed that.
Provision is 48 crores. This is excluding the provision what we held under RBI section of 67.
Okay. So just to be clear, on the 1,000 you have 48 crores, on the 700 you have 67 crores.
Yes, correct.
Okay. Okay, got it. Thank you. All the best.
Thank you. Next question is from Shripal Doshi from Equirus Securities. Please go ahead.
Sir, actually my question has been answered. It was with respect to the new CEO, which you just answered. So thank you.
Thank you. Next question is from Shubhranshu Mishra from Phillip Capital. Please go ahead.
Hi, sir. Good afternoon. So just want to know the number of loan accounts that we have underwritten in this quarter versus 2Q. That's the first question, sir. The second question is there a plan in place, or will the parent be selling off certain amount of stake in Can Fin Homes? If yes, what's the plan, or what has been the board discussion around it? And the third question is, what would be the top 50 branches amounting to the total of books, sir? What proportion of book is coming from the top 50 branches? Thanks.
Can you hear us?
See, as regards the new sanctions, what you asked, we had around new approvals of around close to 2,600 during this quarter.
No, sir, not the amount, sir. I'm asking about the loan contracts, sir. Volume, number of loan contracts.
You want sanction number, total sanction amount.
Number for the quarter.
Okay. It is around 2,400 crores.
Sir, I'm asking for the number of loan accounts, sir. This is the value, sir. How many loan accounts have been disbursed, sir?
Okay. Around 12,000.
And what was this number last quarter, sir?
It was around 10,500, you can say.
Sure, sir. And the rest of the two questions that I asked, sir, the stake sale by parent and top 50 branches as a proportion of your AUM, sir?
I think that at present there is no talks about stake sale by the parent. There is no discussion in it. And I think Canara Bank is making adequate profit and they have got good capital adequacy. So what we feel from our end at Canfin, there is no reason for stake sale at present.
Right, sir. And
as
what would
regards these top 50 branches, it will be somewhere around 40% of the total outstanding.
of the total book, sir?
Total book.
And the same proportion of disbursement, sir? Top 50 would accrue to how much percent of disbursement, sir?
Top 50, I think it will be to the extent of that only.
40% of disbursement as well, sir?
Yes, around, not 40%, around 35%, you can tell.
Sure, sir. Thank you so much, sir. Those are my questions. Thanks.
Thank you. Next question is from the line of Jigar Jani from Nuvama Wealth. Please go ahead.
Yeah, hi. Thanks for taking the question. So firstly, on your guidance, would you be maintaining similar guidance of 18 to 20% loan growth for FY24? And on NIM as well, we generally are guiding about 3% NIMs and about 2.4% spreads in the past. Do you think in FY24, once you have majority of the reset done, we will be coming back to at least 2.4% or above spreads for FY24 as a total? That is my first question. The second question I have is, in your presentation, if you look at the slide 12, on September 22, cost of funds is about 6.19%. But if you look at the pie chart wherein you are giving the borrowing mix at the bottom, the cost of funds for September 22 is 5.57%. So could you just highlight why there is a difference there? And thirdly, I think we have reduced the number of branches by about 5 branches when compared to Q1Q. So any update on that, why there has been a reduction in branch count?
Branches, we have opened 5 branches during this financial year, and we are going to open around 5 to 7 branches every year. And as regards the projections for the next financial year, that NIM and spread, it will be, our guidance will be around 3.5% NIM and 2.4% spread.
And sir, on growth?
Growth, it will be around 20%. Book growth.
Right, sir. And on the cost of fund difference?
The cost of fund, what is mentioned in the funding basket is 5.57% is YTD, whereas 6.19 what has been told is incremental for the quarter.
Okay, understood. And sir, one more query, just structurally, what we have seen is what you have mentioned as your incremental housing loan ticket size that you mentioned in your PPT, that has been going up from Q1 to Q3. So Q1 it was 21 lakhs and now it is 24 lakhs. So is it that we are structurally targeting more higher ticket sizes, or it is just a factor of prices going up and essentially your loan amount effectively going up? Or is it LTV increase? What is driving that increase?
It is a combination of both, because that all those big branches which are headed by experienced and senior level persons, we are encouraging them to give a higher ticket size loan. And in Tier 2, Tier 3 cities, we are focusing on more on affordable sector.
Right, but there is no LTV increases associated with this.
No, LTV is same. We have not changed our any policy with regard to LTV. It is same as it was before.
Okay, understood. Thanks so much for your answers. Thank you so much.
Thank you. Next question is from the line of Ashwini Agarwal from Edelweiss Mutual Fund. Please go ahead.
Hi, sir. Just some question on BT out and BT in. If we see in last 1 year, the interest rates have increased by roughly 190 basis points, and in last 3 to 4 months, the increase has been roughly 85 basis points. In the last 3 months increase, banks have only passed on roughly 20-25 basis points. The home loans, which are roughly at 8.2, 8.3, has gone up to 8.5. They have not gone up to 9.3 or somewhat. So, for your customers, when their rates increase by 2%, do you think that they will not move out because the banks are currently giving loan at 8.5%?
Correct. See, whatever that is being in the public domain about rate of interest, it is for the prime customers. But when a customer reaches any financial institution, rate turns out to be a higher side based on his risk rating and his income level and various other risk factors. And every bank and every financial institution has their own risk rating metrics. So though it appears that 2%, but I think that is not going to harm us in any way. And so far we have not faced anything. And our BT in and out is we have controlled it to about 100 crores per quarter. 2 years back it was 300 crores when our rate of interest was much higher. So we have taken a conscious decision to lower our rate of interest during last 2 to 3 years ago. And now we have controlled that BT out.
Okay. So it is quite possible that you may not pass the entire 200 basis point hike to the customers, and to retain them, the hike may be lower. You will decide that at that point of time, right?
As regards passing of interest rate, it depends on two things. What is the rate prevailing at that point of time and how the risk rating of customers are moved during that 1 year. So if a customer has moved from higher bucket to lower risk rate bucket, his rate of interest will automatically come down. Similarly, if a low risk customer has moved out to a high risk or medium risk bucket, then his rate of interest will go up.
Okay. So it is not an automatic reset. It happens after a discussion between the two parties, right?
No, it is an automatic reset. It is an automatic reset. Before reset, we send a message to the customer.
Okay. And sir, what is the NIM, expected NIM next year, as you said? I didn't get that number exactly.
So expected NIM next year will be around 3.5.
Okay, 3.5. That's a good number. And so, similarly, when we come to the new CEO, there has been quite a lot of delay in hiring the new CEO. So what are the chances that the current person would join in and there would be no hiccups later on?
I cannot comment on this. See, this is a process, and it is a listed entity. We have to follow certain norms. We have to find a suitable person to head this institution. There are many stakeholders. So I think that has taken a time, and a person who is selected, he or she needs some time because he must be working somewhere. Some period is there. So taking into account this, I think it is not a delay. It is a usual thing which happens.
Okay, sir. That's from my side. Thank you.
Thank you.
Thank you. Next question is from the line of Jagdish Sharma, individual investor. Please go ahead.
Hello, sir. What is the borrowing cost which you just mentioned?
Sir, our borrowing cost is now 6.63.
6.6?
6.63.
Okay, 63. Okay. So total borrowing, sir?
6.25.
6.25. Okay. In terms of amount, sir?
Pardon?
Like total amount. Like what is the total amount?
Total amount borrowed is 27,800.
27,800. Okay. Thanks, sir.
Thank you.
Happy New Year. Thanks, sir.
Happy New Year. Thank you.
Thank you, sir.
Thank you. Next question is from the line of Mahek Talati from Yellow Jersey Investments. Please go ahead.
Opportunity. My question was regarding how much of our book is currently from Bangalore or Karnataka?
From Karnataka, if you say, it will be around 20 to 22%.
And from Bangalore?
Bangalore, it will be around, say, 17%.
So, which are the other markets which we are currently focusing on where we see good growth in terms of disbursement, except for this Bangalore market?
See, there is Telangana is there. Then also we are getting a good business from Tamil Nadu also. Then we want to increase our business in Maharashtra, Rajasthan, and Gujarat, these 3 states.
Okay. So there, how many new branches are we planning to open in these new markets of Maharashtra, Gujarat and Rajasthan in order to increase our focus there?
So in coming year, we are going to open around maybe around 2 to 3 branches in these 3 states. And as of now, we are having branches in all the major centers in these states.
Okay. So what is any target to reach like how much % of AUM we are targeting from these markets of Maharashtra, Rajasthan and Gujarat? Any target which we have set?
See, we want to increase whatever the outstanding in Maharashtra, Rajasthan and Gujarat is there. We want to increase the outstanding to around 30% in these states.
How to 30%? By 30%?
In the coming year.
Okay. And sir, just it might be a repetitive question. How much rate hikes have we taken in this quarter?
This quarter means last quarter or this current quarter?
This last quarter in Q3.
Achha. Q3 we have taken a 50 basis point increase, and this quarter we have increased around 35 basis point.
Okay. Thank you.
Thank you. Next question is from the line of Ankush Agarwal from Surge Capital. Please go ahead.
Yeah. Thank you for the follow-up, sir. So firstly, when you say that selected CEO is expected to join by the end of financial year, so do you mean that the person is already selected and the process is already complete and it's yet to announce?
Pardon, I think you are not clear. I think some.
What I mean that you said that the selected person would be joining by the end of financial year. So do you mean that the person has already been selected and you're just waiting for him to join?
Yes. The person has been already selected and we are waiting for him to join.
Okay. And would it be possible for you to share some more details around the person?
See, he is from the industry and he is an experienced person.
Okay. And secondly, sir, just a clarification on the branch count. So the third quarter slide shows that we have 187 branches. So is it a misprint or like we have closed branches?
No. We have not closed any of our branches. We are now having satellite office and branches put together. We are around 205 now.
Okay. 192 plus 13 satellite branches. Okay. So there's a misprint in the presentation of this call.
Okay. Thank you. We'll get it corrected.
Okay. Thank you. That was it. Thank you.
Thank you. Next question is from the line of Gaurav Jani from Prabhudas Lilladher. Please go ahead.
Thank you, sir. Firstly, if you could just quantify the investment income and the treasury income in Q3.
Sir, you are not clear, sir. Can you repeat, sir?
Just a second. I'll just come on the handset now. Yeah, is it better now?
Yes, sir.
Yeah, what I was asking is, can you quantify the investment or the treasury income in Q3, please?
Just a minute. Sir, we will get it, sir. Meanwhile, we can take another question.
Sure. So just to follow up also on that. So on a 9-month basis, we reported a margin of 3.46% versus 3.44 in the last 9 months. So if you could strip off the treasury income and then please give out the margins. So that's on the treasury. Secondly, you mentioned that about 28% of the loan book has already been repriced with 72% remaining. What would this number be on the borrowing side as to what proportion of borrowings have already been repriced?
Borrowings.
The borrowings are linked to 3 factors. One is T-bill linked, second is repo plus spread, third is MCLR. Whereas T-bill plus spread is to the extent of around 4%, which is getting reset as and when the T-bill rate is changed. And most of the borrowings are linked to the three-month T-bill, so it is getting reset at the end of every anniversary quarter. Whereas repo linked rate also we have gone with the anniversary concept. That means as and when repo changes, it will not change the rate, but on the anniversary quarter it will get changed. That means there also we have a leverage of some time to calculate and adjust. And MCLR also is on a quarterly MCLR basis. It will get changed only at the end of quarter. That means virtually the borrowing book is getting repriced at the end of anniversary quarter, and we will be knowing the applicable rate of interest well in hand so that we can do the back calculation to ascertain the impact on the NIM and spread and rework the lending activity as such. So as to what I explained, I want to just add on some more things. During this financial year, 2.25% is the increase in the borrowing cost, and because of the lag effect as well as this anniversary reset, we have passed on this load to our customer to the extent of 1.6% only during this financial year. 1.35 this we have passed on. That means if we compare to the other banks, their lending rate as of 31st of March to 31st of December, what the hike has taken place, and what is our lending rate from 31st of March to 31st of December, there is a huge gap. So this is only a clarification given to the earlier questions also, that whether you have an avenue to increase further to take care of your NIM and spread. Yes, there is a scope, because we are still incrementally, we are behind than the bank increase has been taken place. The banks have increased on a phased manner month on month, but we are not done like this way. So that is why you have a scope to see that NIM and spread is not compromised in the next quarter, this quarter as well as coming years. I hope I clarified your point.
Yeah, appreciate your input, sir. What I was only trying to ask is, of the 27,800 crore of borrowings, what proportion has already been repriced?
So that is 28%. 72% is
no, the borrowing. Our borrowing book is linked to T-bill spread as well as the T-bill, MCLR as well as the repo. But for the NHB, leading the NHB, if you want to see exactly, NHB 6,500 crores is out, which is linked to a separate rate of NHB. CP and NCD is to the extent of another 6,000 crores, which is the fixed rate of interest. So out of 27,000, 12,000 crores is out. The remaining 15,000 crores is already got repriced. 50%.
Understood. Really helpful. Just a slightly different way of asking you, in terms of margin guidance versus a 20% AUM growth for FY24, what is the likely NII growth that we would look at?
In terms of what? No, NII growth, what happens is, what we are told, the NIM and spread is maintained at the guidance of 2.4 and around 3-ish. Keeping that as the base, we are doing the reworking. On the same lines, what you can see the NII, the same will be continued. When NII is derived, the book growth is derived, you can do the reverse calculation and derive what will be the NII. So our calculation is on the basis of guidance, 2.4% of spread and around 3-ish. That is 3 plus is going to be the NIM.
Sure. No, what I was just trying to understand that, sir, whether the NII growth would be more than 20% or not.
It will be by default.
Understood. Thanks a lot, sir. Please, if you could give me the data points I had asked for.
Earlier question regarding the income from the treasury income you are asking, the investments are held for the purpose of SLR as well as for the LCR purpose. And the LCR purpose, they are invested to the extent of around on book. You can see the expenses investment is around 1,200 crores, which was earlier lesser than that one. So current year, for the 9 months, the interest earned on investment, what you call as a treasury, is around 79 crores. The same period last year, it was around 13 crores.
Understood, sir. Appreciate this. Thanks a lot.
Thank you.
Thank you. Next question is from the line of Q3FY23 from Arihant Capital. Please go ahead.
Yeah, sir, it is based on your credit cost guidance for the next fiscal. What's the number that you put up?
Credit cost. Credit cost is around 0.06%, and going forward it will be around the same range.
Okay. And sorry for being repetitive again on the margin side, given all the inputs that you have given so far, don't you think that margins of 3.5% instead of 2.4% still very conservative? You can outbeat that by a very big margin, or that's not the case?
Just to add to what we said, we are mainly, our book is almost totally retail. So it is a very sensitive rate of interest, is a very sensitive matter as we deal with the retail customers. And we have to see what the other banks and other HFCs are offering. So based on this, we have given a guidance of 3.5% in the near future.
Okay. And what's outstanding provisions that you're holding? Total provision of 1,000 crore restructured book, that is 67 plus 48.
Restructured books is only 701 crore, madam.
Okay.
And the provisioning is restructured books is to the extent of 10%. RBI guidance is clear. We have to hold 10% of the restructured books as a provision, which is over and above the provisioning what we are holding in the books in the normal course, either as per IRAC or ECL. So there is